What's up, everybody? Welcome back to the channel. Welcome back. Today, we're going to quickly go over this trade that I just executed today. Today is Monday, December 8th, 2025. I did a breakdown yesterday, December 7th, which was Sunday, of EU and where I was anticipating the market. So just right here, we're going to quickly go over that. As you can see, this is just a screenshot from the post that I've made. You can see at the top right here where it says yesterday. So what I saw this is from the 1 hour. I see that we had this low down here that led to this high that broke this here structure. And I see that we have not reached the discount range where this imbalance lied. So we wanted to see price retrace back to the zone before pro-trend bullish move. We can see that this high led to this low, breaking this structure of the low that led to this high that broke the previous higher high. So we know that this confirmed a bearish trend. Price did retrace, mitigated a discount range of that zone, a premium range of that zone, I apologize, before pushing down to break structure to the downside. Now we'll go to the 1 hour and get some more annotations of what's going on. I did mark that we had this consolidation range right here that price needed to sweep, as well as the low of this Asia range. Price didn't quite close a body or a full wick underneath it. So I did believe that this was a setup to give the intention that price was ready to go bullish because it got so close to this discount range. But I knew that this was not ready yet. We also had a previous day low at the bottom of this range. As you can see here where I marked price, this Asia low was not fully swept. Let me zoom in some more if I can. There we go. As you can see, I marked this Asia low was not fully swept. It looks like an equal low. We have that this consolidation range, this seems to be a consolidation range of resting liquidity. We have our imbalance here that we wanted to, and we have that marked as our POI for potential buys, being that it lied inside of the discount range. Now, as far as this price action, this trading range, this dealing range, we can see that price did, when it came down and did not break this low, it retraced into the premium of this range right here from this high that led to this low. So this is our dealing range high. This is our dealing range low. Price did retrace from this range between these two. This is the first dealing range high. This is the dealing range low. Price came back, mitigated the premium, pushed down, broke structure, and we have not retraced to any higher levels at that point yet. Okay. So we'll go to the next screen where we saw, okay, let's go deeper into what we were looking at. Now we identified that we had an impulse candle here, the candle before it, where price mitigated last week and froze. When the market opened during Asia, what we had was a buildup of liquidity and a trend line above, letting us know that price wants to go sweep high as well as low, but we would allow London and Asia to work this out. So we were not anticipating what would happen during London or Asia, but we knew that whatever the price action that would happen during London and Asia should favor the overall bias, which you see here, my overall bias for EU is a continuation of the bearish trend. Perhaps we can get one more bullish inducement sweep of the trend line, which is right here, then mitigate the impulse candle deeper during Asia to allow London session to continue the bearish pressure towards the liquidity and my potential POI for buy opportunities. So this is what we wanted to see. We wanted to see price come sweep this trend line here, take this high out, and potentially either mitigate deeper into this premium or even come higher. But for now, we did not know what price was going to do. We just marked what we anticipated. Okay. And this would be the 1 hour. Let's see. This was our 15-minute range, as I mentioned. Yes, this was the 15 minutes. So now let's get into the chart so I can show you what actually happened in the trade that we were able to take today. Okay, so today's trade, when we came into the market, remember the 15-minute range that we marked. I'll bring the market down. Before I do so, let's go ahead and look closer to what happened instead from the range that we spoke about. So first thing first, what we can see is this was the build-up range that we saw prior to the market opening during Asia. So what did we get during Asia? Asia gave us this buildup of trendline liquidity. That price ended up coming higher to induce this high. On a 30-minute, we can see that this zone right here was a 30-minute supply that led to a break of structure. This high led to this low, breaking this structure here. Between this dealing range, you can see that price retraced and mitigated the supply the first time, pushing down, causing this break of structure. Later on, we get this push back up to do a inducement high, a major inducement of this zone before price began to drop. Now, let's get back to the 15-minute and let's uncover what was going on. So during the 15-minute, I'll even go to the 5-minute actually, so we can get more price action. So in the 5-minute, what we can see is coming outside of this consolidation zone, price swept the high first. We took the high, we did not take the low yet. And price left this demand here that looks like it would be a demand for price to react from for buys, but it was actually a smart money trap, which I'll explain later of how this became a smart money trap. Now, when price gave us this trend line liquidity, we had this high, we had from this low to this high to this low. I'll even mark as I go to this high, to this low, to this high, to this low, to this high, to this low, all the way till we reach these highs. Now, from this high, price gave us a retracement and gave us a high that could not break this high after mitigating the supply. So this was our first leg. Then price pushed back up, giving us a second leg. Now, this was before London opened. Then, right during London Open, price gave you an unintentional movement of a bullish price action here. Then did a liquidity sweep to the downside to sweep this bullish run, this bullish push, this fake out to make it look like it was going to be bullish because price reached here, which was another smart money trap. So price gave the illusion that this here was going to hold. So this was your smart money trap. Why? Because we've already mitigated the supply. So invalidation model lets you know that price would fail this demand because the supply was already mitigated. So what did price do instead? It gave us that fake reaction, tapped into this premium, this supply zone, and pushed down. After sweeping this liquidity to the downside, what do we get? A retracement, mitigation of this imbalance, and price kind of consolidated, trapped some sellers here, trapped some buyers, built up liquidity, came up and gave us an equal high. But because the bearish intention was so strong from this major inducement we had here of the previous day high, the market was not able to push up higher to this zone. This is where we were anticipating to sell from. I wanted to see price come into the zone and take out the high of this unintentional movement to mitigate deeper into the zone for me to find the best sales opportunity, which would have been this swing high here. Down, let me mark it for you so you can see. Would have been from this swing high down to this low. This was where my premium zone lie. So being that price didn't come that high and I was watching the market early on to see what happened, what did we get instead? Out of the consolidation range at about 8 a.m. 8 a.m. is usually a trap. It's a trap time. So usually you'll see me have on my chart where I would mark like this 8 a.m. and I have it written. It's going to say New York trap as you see marked here. So for me, I know that during 8 a.m., we're most likely going to get a trap. Just like right before 3 a.m., you're most likely going to get a trap for London. See, at 2:40, 45, almost 3, you got this unintentional movement followed by a liquidity sweep, retrace, mitigate, and expands. Same thing we got here. What did we get? An unintentional movement, price giving a bullish intention, strong bullish candles, giving you the idea that we are going to be bullish whilst faking you out, seeing this break of structure, faking out early buyers to give them this break of structure, making them think, oh, wait, price is bullish because we've broke over this high. This high led to this low and broke to the downside. So they're thinking, okay, we've broken above this high. We are now bullish. We should be bullish, but that's not the true intentions of the market. We're not bullish. Instead, the market is trapped you in these consolidation range. So you don't know which side is going to be favored first. And you're not within your key time window, so you shouldn't even be looking for buys at this time frame. So as you can see, this is at 8 o'clock. So 8 o'clock, we get the unintentional movement. Let's go to the 1 minute now. 8 o'clock, we get this unintentional movement, this fake out. followed by a small consolidation and a sweep of that liquidity. We swept the low of that liquidity. Price came down, gave us a break of structure of the 5-minute low. This was the high, remember, that I told you. This high here on the 5-minute led to this low and broke structure to the downside. Now we have this low leading to this high. Let's do a sweep. As you can see on the 5-minute, it was a sweep. On the 1-minute, we had a body close. But on the 5-minute, it was simply a sweep of the highs of these liquidity, this trend line right here that price built up. All of this was engineered to fake out early buyers, giving them the intention that we were bullish. But this was simply a sweep of these highs for price to then push down and break structure to the downside. So at that point, we know that this inducement is valid because it led to a break of structure. It led to a break of structure. And part of our trade confluences, as you know, is we want to see these in action. What did we see here? We want to see a time-based manipulation. We want to see after a mitigation of a high time frame supplier demand, which we got here. We mitigate this high time frame supply. We want to see a change of character, break of structure, which we got here, change of character. We broke structure to this side as well. And we've got all three of them in alignment. The only thing we're waiting for is time. So our price to come into a 9 o'clock mitigation, then we'll have all three. We also want to target liquidities like smart money traps, trend lines, and things of that nature, which is what I mentioned that we had at the bottom here. We had this smart money trap at that point, and we also had other liquidities such as this consolidation range, unintentional movement. We also had the London low. We also had this Asia low to target, and we also had a previous day low to the downside. If I go to the 4-hour, you'll see it more. We've had this previous day low right here that needed to be target. That price that was resting right above our imbalance. Um, and last but not least, we had this consolidation range that we spoke about from the screenshot that needed to also be taken out. So we've got our confluences for why we were favoring the sell early on since yesterday. So now we're just watching price action to wait for our true confirmation in order to sell the market. So now let's go closer into price action. So now after the unintentional movement happened, we got the liquidity sweep. Price left an order block right here. You can see the strong bearish candle. It led to a break of structure. That was the intention right here that was made from this zone right here. Price came. One bullish candle was trying to push price back up. Once it reached this order block right here, where the big bullish candle happened, it tried to push back up. Sellers confirmed it down with strong bullish intention, strong bearish candle, strong momentum following that. So that lets us know that there is a lot of liquidity here in this 3-minute order block. So when we go down to the 1-minute, this is what we got. We got price coming back in after causing this break of structure here. Price gave us a retracement, mitigated this low order block. All this order block did was tapped into another order block from the trend line. Mind you, you have to keep close eye on the market. The full trend line was not swept yet. Price simply came and respected another demand within that order block. That's not, it's on top of that, you have this Asia low, you have so much more liquidity to the downside, you have the bottom of this consolidation that was not taken yet. So you know that there's more liquidity to be swept. So we can't allow that this demand all of a sudden is going to favor over the price action that we're seeing so far. And even if you were to assume that, you would want to wait for confirmation anyways from this demand. You would want to see a 2-leg protocol for price to come back, mitigate, to push up, to violate the supply. But instead, what we got is one leg, come back down, already mitigates the demand, pushes up again, taps into our supply, gives us a retracement. Our supply then come back up, could not break above this high. Price could not break above the high. And what did we got instead? A respecting of the high and price push down, giving us the same confirmation that we have in our entry model. Oops, I'll post it again. The same confirmation from our entry model. What did we get? price gave us a change of character. We've got a change of character. We got a breakup structure. Now, we've already had the high time frame mitigation from way up here. So we don't need to get another high time frame mitigation again. We already had that happen from here. So we don't need to have that happen 2 times after price has already continued the bearish move. All we need to see now is just a lower time frame entry model to execute. So, and that's what we got. So we had our unintentional movement followed by a liquidity sweep or the reveal of market intent. Price mitigated this zone to use it as a trampoline to come back into the supply, mitigated our supply, gave us a change of character, consolidated, breakup structure, push back down. This was another smart money trap that price created. This smart money trap was used to invite early buyers in who were saying, oh, this zone was respected. Price pushed up, went deep into this supply. Now it's came back to retest to push higher again because they're seeing one tap, two tap, they're seeing equal highs. So they're seeing these liquidities as a reason why price wants to come higher. But what we know is there isn't a strong demand here that's able to push the price back up. So instead, what we waited for after we've got our confirmation, we positioned ourselves for this 3-minute order block that we already identified. This, I'm sorry, not the 3-minute, the 1-minute order block that we already identified. The 3-minute order block was from here. So that price reacted from. So this 1-minute order block, which also was an impulse candle, the candle before it, price came back, retest, and dumped from there towards our overall bias. We took out the smart money trap. We took out the trend line liquidities to the downside. We took out this consolidation zone. We took out the rest of this Asia low that we mentioned that price did not quite fully take out. It was just resting on top of it. We took out that Asia low. We also took out the previous day low. We ended up TP at 1 to 10 as a full TP after taking out this range. We were not trying to target lower, even though we were anticipating price to come here. We understand that at any point, price could begin a retracement after the inducement. So we didn't want to be a part of that liquidity retracement. So instead, we took our trade and took a 1 to 3 partial within this range here. We took 1 to 3 right about here. We took half of our liquidity off the table, half of our trade out of the market, half of our position was taken out of the market, and we full TP to the 1 to 10 range, which was right here. We took our full TP. So that was my trade from today. I just wanted to share it with you guys just so you can have an idea as to, though we were anticipating price up here for our sales, you have to watch the market closely. As you can see from the dealing range of this high to this low, this was the discount that price mitigated. You go to the 5-minute, you can see you want to position yourself on time frames that are valid in the market, your 5 minutes, your 15 minutes and higher. Those are respected time frame, respected breaks of structure time zones. So when you get this 5-minute high leading to this low breaking under another 5-minute low with a body, not just wicks, you can see the final candle here close the body to confirm that before it retraced. And you can see that the retracement was at a premium level. This was a premium level for that dealing range. So the fact that we've mitigated this premium level and was able to push down, giving you a change of character and a break of structure within the 1 minute after mitigating this premium level, that was all the confirmation you need to wait for an entry. You could have said, okay, I wanted to see price come into this zone here. You could have also said you wanted to see price come into many different zones higher here, etc. But the fact is, when you get an impulse candle like this that breaks underneath this low, this was an intention of a buy. This was supposed to be a buy, but price fell to push higher. And the intention was made right here that it was going to be a sell. From that moment, you don't need any more confirmation to know. You simply position yourself for the sell opportunity. And this was a 2.1 pip stop loss, and we ended up with a 1 to 10 risk to reward. I hope you found some value in this trade. I hope you enjoyed watching this. I would have went deeper into the 1 minute, giving you all the build-up inducements of price action leading to these zones. But so far, I wanted to make this a short, sweet, and quick and to the point type of video. As you can see, you had so much liquidity here, retail support and resistance all underneath. All of the necessary liquidities to target were there, especially the bottom of this zone. We had this buildup, which has not been induced during that time. So all of our validity for that sell was there. So if you have further questions, if you want to see more concepts like this, as I said, I will show you breakdowns of my wins, breakdowns of my losses as well. Definitely stay tuned. Drop a comment if you have some things you want to address. If you want to see more of my breakdowns or even my trade analysis days before the market opens, follow me on the Instagram, where I post about it. I post a narrative before the session. That's at the Suited Trader on Instagram, on all platforms. And you'll be able to also join our Discord where I post and I narrate my price actions on a daily basis and the trades that I take. So without further ado, I appreciate you guys tuning in on this call. I want it to be short, quick, and to the point, and we'll continue to have more of these types of videos for you in the future. Without no other um interruptions, I'll go ahead and end this call. I'll see you guys next time. Peace.